Hey, Sebastian, thank you for coming back on the channel here. I have some questions about debt consolidation, debt settlement, and debt restructuring. What are these things? When do they make sense? What's the difference between these three things? On this channel, as you know, and on yours, we talk a whole lot about debt, paying off debt, accelerating debt, using different debt elimination strategies such as snowball, avalanche, cash flow index, velocity banking, even using a cash value life insurance policy to eliminate debt, free up cash flow, build credit. These are all wonderful things. But then there are numerous case studies, numerous scenarios that I believe you deal with more than I do as it relates to when people are approaching these potential options that they think
hmm
is best for them. And I think what happens in my case is I end up working with people who are already in it. So it's kind of hard to determine whether it was a good idea or not. Most of the time, the person's reaction is they didn't know anywhere else to go. So they weren't even processing whether it was a good idea or not. It was like this was the only thing I
Right.
thought I could do to help my situation. Then they find me. Now they start to make improvements in a different direction. But like typically,
Yeah.
the settlement, the consolidation, restructuring, it's like it already happened. I want to
Right. Right.
go. I want to really touch on the pros. When does it make sense typically, and when does it not? So I want to give you the floor.
Sure. Thank you. So I guess first thing I want to say is that what gets really confusing is that depending on which website or firm you're looking at, they actually use these words interchangeably. So you'll see one company talking about debt restructuring, but it sounds like what they're explaining is debt settlement, and another's talking about consolidation, but it sounds like restructuring. And they'll argue, well, no, this is restructure, this is consolidation. So I think the first thing we should do is I'm at bankrate.com. I'm just going to read like a basic simple definition of all three of them so we can kind of establish that premise. And then when would there a good use case be, or when should you just not even consider that? And I think the problem is that what I've heard it. I'm sure you have. If you listen to the radio, you're driving, you'll hear ads for these solutions, as if they're the only solution.
Yeah.
When and that's where people get kind of like caught up in, oh, okay, I'm gonna call this company because they heard them on the radio and it sounded like it was a good option. So yeah. So with that said, I'm just gonna go ahead and read this paragraph here from bankrate.com, and it's giving us a simple definition of debt consolidation, debt settlement, and restructuring. And it says debt settlement, consolidation, and restructuring are all strategies to manage debt, but they differ in their approach and outcomes. Debt settlement involves negotiating with creditors to reduce the amount owed, while debt consolidation combines multiple debts into one, potentially lowering the interest rate or payment term. Restructuring, on the other hand, involves negotiating new terms with a single creditor, often to avoid default. Each method has its pros and cons, and the best choice depends on the individual and financial circumstances and goals. So, I guess first, if we're going to look at, based on this definition of debt settlement, it says is to negotiating with creditors to reduce the amount owned. So this is where typically you're going to hire a company. And could you do it yourself? You could, right? So that's one thing to keep in mind. You could hire a company to do this for you. Um, but then what they're going to do is they're going to negotiate a settlement. They're going to reduce the balance owed, and then they're going to add their fee on and then charge you a single monthly payment to pay off that debt. You could probably negotiate that yourself without having to pay that fee. It's just a matter of you taking the time to call and negotiate.
Hmm.
They don't have any more leverage than you to negotiate. It's just that's what they do. So for them, it's just like drinking water. Where for maybe me and you, it's not something we do on a regular basis, so it seems daunting. But it is something you could do yourself. Debt consolidation combines multiple debts into one. So now that's going to be where, we're using a line of credit, we're using a term loan that has a lower rate, and we're basically paying off other debt and consolidating it into one debt with a lower interest rate, or that has functionality that can be advantageous to us. And again, you can do that yourself, or you might need some support or coaching depending on how strategic you are going to be with your consolidation strategy. Um, Potentially, the last one is restructuring, which involves negotiating new terms with a single creditor, often to avoid default. So this is again where you are at the brink of defaulting. You have no you. This is an issue of I can't afford to make payment, right? Not I'm not happy with the rates or terms. I just can't afford it. And you at this point, you have a choice to make. Either you're going to restructure, um, and this is most likely going to cause negative repercussions on your personal credit when you do
Yeah.
this. Um, so you can, at this point, this is where you might want to weigh this compared to a bankruptcy, because when you're going to restructure like this, most likely what's going to happen is the debt's going to be listed as settled for less or charged off. And as a result, it's going to impact your credit for 7 years. So the statute of limitations is 7 years. The downside to the bankruptcy is that it's 10 years on the statute of limitations. But on the restructure, you're actually still paying it back. You're just paying back a lower balance.
Okay.
On the bankruptcy, the cost is the attorney fees for the bankruptcy, but then you're not paying it back. So you're going to probably
Pretty
save a lot more
significantly.
money on the
Yeah.
bankruptcy,
Hmm.
but you're going to have a extra 3 years of damage on your credit to deal with. In both cases, you can start rebuilding credit within 2 to 3 years,
That's
and
true.
within, I'd say, 4 to 5 years, potentially be back in a place where you're lendable if you're aggressive in proactive in rebuilding your credit. But it's really more of a question of, are you ready to give it all up and start over from scratch, or do you want to really just keep everything and just reduce the balance or reduce the cost, and then push through.
Gotcha. And in a bankruptcy, sometimes they also take
Which
things,
again,
right?
say again.
In a in a bankruptcy, they also can take things, right? Like maybe a car or something like
They can, yeah, yeah. When you file bankruptcy, you can, first of all, obviously, I'm not an attorney or bankruptcy attorney, but depending on the case, certain things can be included and certain things can be left out. So not everything has to go into the bankruptcy.
right.
I know I've heard of situations where you don't lose your car, and there are situations where you will lose the car. So it just depends on the circumstances of your case, and of course you'd have to consult with a bankruptcy attorney to find out what the laws are in your state, and how that would apply to your circumstances.
Okay, so quick little recap here so I make sure everyone is following along. Debt consolidation combines multiple debts into one loan essentially. So that's where you get a lot of folks I think are most familiar with debt consolidation.
Yeah.
That's where you can take out a home equity loan and you consolidate all your credit card debts into your home equity. Some
Right.
people do that, or you get a big jumbo loan, or you get mail where they're like, consolidate with us, pay all your debt off, and have
Right.
one payment. That's the
Yep.
attraction there. It's simple. Oftentimes you're paying a lesser interest rate. Doesn't mean you're paying less interest. That's something
Right.
to keep in mind. But you're paying a smaller quote unquote rate and a
Right.
smaller payment, and the term is typically longer, which allows you to almost free up some cash flow in many cases. And then the
And
debt,
also, instead of having multiple payments, you now just have one payment,
just one, right?
which is also another feature that makes it attractive to people.
Okay, so here's a question. On the radio, we hear national debt relief all day
Right.
long.
Yep.
These debt relief companies, are they doing debt consolidation, or are they doing debt settlement or debt restructuring? Do you know?
Yeah. So, um, I'm literally at their website right now, and they're talking about the difference between debt consolidation and debt restructuring. And they are basically doing debt. It's a debt consolidation restructure because they're, instead of restructuring one debt, they're restructuring multiple debts and then consolidating it into one loan. So
which
it's kind of a hybrid. They're
they're the
doing
new lender.
both at the same time.
Which, yeah, so they're the new lender over you. They're negotiating with your existing creditors, essentially negotiating different terms to maybe pay them off,
Hmm.
and then now you pay national debt relief. Within the debt restructuring, debt consolidation world, there's also the strategy where people will stop making payments on essentially all their debt, allow things to go into what is it called?
Default.
Default, where it goes into collection.
Right.
So now they have debts that they're not paying on, late, 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 late. Then that company comes in and starts negotiating.
Correct.
I would say, would you agree that's one of the worst ways when you're being instructed to stop making payments on your debts for the purpose of allowing it to go into collections so that you can then negotiate versus
Yeah.
trying to negotiate in advance before going into collection
Right. So the challenge is that most lenders are not going to negotiate
until.
um, until you go negative, until you're in the default,
Okay.
and so they're actually not going to stop adding interest on your debt.
Correct.
So even if you're in a state of hardship, you're still going to be getting interest added on.
Late
Um,
fees. Yep.
Late fees, so they may give you a payment plan that you can afford or more affordable payment plan, but it doesn't stop the hemorrhaging. It doesn't stop the increase of cost and interest. Where once you default, it doesn't stop immediately, but after a certain amount of time, then they close the account, they report it as a charge off to the credit bureaus that they charged it off, and then they sell that debt to um um a um what you
Like a
call it,
like a debt relief company, like a
not a
national.
relief company, the guys that come after you. I don't know why my brain's blank right now. The
Oh, like those. It's very similar to like the repo. Uh,
Yeah, I don't know why my brain's a blank. Um,
uh, like a bondsman.
yeah, collections company.
Okay,
I
so
don't
restart.
know why I couldn't think of that. A
Restart it.
collections
Restart.
company. Yeah. So they basically, so that once they charge off the debt, then they sell the debt to a collections company, right? Which is basically an attorney firm who now buys that debt, typically at pennies on the dollar, right? And so they are willing to negotiate and settle that debt for less because they're going to make profit no matter what as a firm, right? The debtor or creditor that originally they already took the pain, took the hit, and that's what, and their recourse was to charge it off and hurt your credit, right? But
Hmm.
now it's with the attorneys or collection companies, and typically they'll start reaching out to you, and after, I don't know, between 3 to 6 months, you end up they'll end up sending it to court to sue you for the debt. And if you don't respond, then the court can then garnish your wages and seize
Gotcha.
assets, and that's where you don't want to get to that point. So you, worst case scenario, negotiate a settlement with the collection company. You could negotiate it, who knows, from 15,000 down to 8,000, down to 9,000. Set up a payment plan, and you know pay it off. Of course, you've already tanked your credit. However, if you hire a company to do that, now you're going to have to pay that company fees on top of that negotiation,
Hmm.
right?
Yeah.
So yeah, that's a bad. So companies, that is their strategy. They'll tell you to, you're going to have to default to get to there. And in this example, of personal credit, personal debt, again, it's just south of filing bankruptcy. You really need to just weigh, like, should I just do this? Should I do this, or should I just file bankruptcy? Because you're going to pay it back anyways, maybe not all of it, but I'd say 60 to 75% of it will be paid back anyways, plus the fees of the company that's doing the service. Where if you file bankruptcy, you're probably not going to pay all that back. Just you have a little longer 10 years instead of 7
Right.
years. So that's
Okay.
where that way. So where does this like come to play? This comes into play where you just don't have it. You lost
Yeah.
your income
So
was reduced. You cannot
let's
afford it.
let's create a case study then. So
Yeah.
let's create the scenario where you have an individual that has now, they're in a place where they're unable to continue to make payments on all of their debt. And we've got less than 30 days to make a decision. Typically, what most will do is they let the credit cards go first in terms of late fees. They're going to keep paying their card payment, keep paying their mortgage payment, their rent payment. We start getting into the needs, right? What needs to get paid first, and then what
Right.
gets paid last typically are credit cards, student loans, medical bills, personal loans, those things. So let's say we have someone in that situation where there are tons of people. I work with a good amount of folks that are really at that brink where they've got little to no cash flow, or they're operating out of a negative and essentially borrowing from their utilization, credit cards, lines of credits, to pretty much finance debt. And they've got a run rate that's running out. Out of the three options, debt consolidation, debt settlement, debt restructuring, where does your head typically start with someone that is at that place? Zero to very little cash flow to negative cash flow. We're about to be late on something. Say we got very, very little time, 30 days ish, or less, to figure out what our next move is going to be. Where does your mind typically go first?
First thing I'm going to ask them is, do you have the time and ability to increase your income in any way, shape, or form? Can you get a
That's first.
part-time job?
Yeah.
Can you,
Can we
what can
make
we do to
fast money?
increase
Can we
income?
get a gig? Right?
Yeah,
Anything
right.
to almost
What can we
buy
do? A
30
side
more
hustle.
days. Mm-hmm.
Yeah. Number one, what can you liquidate? What other assets do you
What
have
can I
that you
sell?
can get access to that you can
Garage
leverage?
sale. Okay,
Yeah,
cool.
right.
Too.
Um, then from there, um, is how long can we continue in this with this situation, and how long is it going to take to pay off one card so that we can free up that cash flow, pay up the next card, free up that cash flow? If we're basically snowballing, how long is it going to take for us to get out of this? Can we bite the bullet for 6 months or a year and tighten our belt and push through this? Or are you pacing? Are you really, I mean, is it going to be
Yeah.
buying groceries? You
let's
know,
say let's say we're doing that, person did that, and then hurricane comes, tornado, natural disaster. Now they're like really down.
yeah,
Okay, it's down to like paying groceries or paying my credit card bills. So
yeah,
let's say we're at that point, right? We did first and the second. We've even exhausted friends and family, asking for help, church, you name it. Say we used
yeah.
that, and we're still behind, but we have decent to good credit because it hasn't tanked yet.
Okay.
We're able to maintain. We're able to maintain. Okay, we bought 30 days, Sebastian. We bought another 30 days, but I'm
Yeah.
still behind. This hurricane just came through, took out some things. Work it. We're not in work right now. We're not working. Now what? What's our next play?
Okay. So if we have decent to good credit, because that's the next thing, is okay, what is our debt to income ratio? Because even if we have decent to good credit, if the DTI is lopsided, um, then we're not really going to be able to get any other tool to help us.
Correct. Lopsided meaning over 45, 50%,
For a better product, under 30%,
under
but
30%. Okay.
you can get help with 40%
All right. Let's say we're there.
DTI.
Let's say we're
Yeah.
there, right? Because a lot of Americans are already there, even with positive cash flow. They're at like 30+% DTI. So let's push it to
Hmm.
40. We're around
Okay.
40% DTI. Time's running short, but we
Yeah.
have pretty good credit. We're in the
Yeah. So it
by
would be worth an
sticking with them.
application to see if we can get approved to consolidate.
So debt
Um,
consolidation.
yep.
That's like the first
To
thing that comes to mind. Okay.
right. That at that point, right? Because then potentially we can take 3 or 4 debts. Let's say we're the monthly expense on that is $300-400. Maybe we can get that into a new product and cut that expense in half.
Yeah.
The interest rate long term may not be favorable, but short
It's the
term
payment.
it could free up cash flow.
Yeah, we're really focusing on the payment at this point
Correct.
that can free up the cash flow to buy you that time that you need to now keep doing the same thing of steps 1 and 2, gig, more income,
Correct.
tighten the belt, right? Cut, reduce, restrict,
Yeah.
temporary conservation mode to
Hmm.
really self-analyze every dollar that's coming into your economy and really maximizing every dollar that goes out. So, and to be very clear, because I've seen people say they did a debt consolidation, but what they actually did was more of like a debt settlement. So, debt consolidation in this example that we're sharing here doesn't involve you not making your payments on your debt. So, we're going to draw that distinction, that line in the
Right.
sand, is a debt consolidation does not involve you no longer making any payments on your existing debts. What will happen is a lender comes in and pays off things for you. And now you have a new lender. So you took out 6, 7, 10, 3 lenders to have just one lender, one account, one payment, one rate.
Right.
Okay.
Yep.
Let's say, because that's the simplest, most straightforward, and there's a lot of ways you can do debt consolidation, right? Maybe obtaining a
Right.
line of credit,
Right.
PLOC, HELOC,
Right.
first lien. There even credit cards could somewhat
Hmm.
do it in a sense. 0% for 20, 24, 12 months, 18 months, that sort of thing, or a home equity loan or big jumbo loan, personal loan, and it's just eating up all those other debts. Now you got one
Yep.
payment. You would agree that's like probably one of the easiest, simplest ways to go about it
Right.
to sort of stabilize a family.
To stabilize. Right.
Yeah.
Another use case could be where you do have good credit, but maybe you're maxed out on your credit card and you do have good debt to income, right? And so your objective is to potentially get access to a line of credit at a lower rate, whether it be a HELOC or a personal line of credit, but you can't qualify because your utilization on your credit cards are so
Very
high.
high. Mhm.
And then in that case, it might make sense to get a term loan that you can use to pay down the credit cards, not necessarily pay them off in full, but get them to under 30% DTI, not that DTI, debt service. Um, so that way the balance to limit ratio is under 30%. And voila, your 680 credit score turns into a 780 credit score because now you have 10 credit cards that were over 50%, now under 30%. And that's something that a lot of people are confused about because when you look at the credit report, it shows you this overall utilization ratio.
Mhm.
But when it comes to credit cards, each individual credit card
Has
impacts
its
your
own.
credit score per card. So you can have 10 cards, 9 of them have a zero balance. One of them is over 50 and it's going to tank your score.
Yeah.
You get that one card under 30, your score goes up.
Yeah.
And so that's another case where it might make sense to get that loan, even if it's a term loan, not a line of credit, to as a bridge to pay down the credit cards, increase the score. So now you can qualify for the HELOC or the personal line of credit or business line of credit. And then you can practice velocity banking.
Right. So velocity banking typically being like the first preferable option from us, if it makes sense and if they understand it and if we can set it up properly, then great. If not, term loan is like the next option to almost buy time to get the next tool,
Right.
or a home equity loan if you have a property, or a big personal loan that just kind of like
Correct.
sums up all the debts. Okay, so now let's make it even worse and
Okay.
say where same person, they're doing steps 1 and 2 that you mentioned, but their DTI coming into this where 45, 50% or more DTI. So now
Yeah.
we're flipped. Now, what's the next thing that comes to mind? Even after doing everything you said,
Yeah.
externally getting, more income, spending less money,
Yeah.
all that stuff.
So no
Time's
more
running
option.
short. Yeah,
You can't
hurricane came
qualify for
through.
anything.
Right,
Yeah.
can't qualify for anything. You tried, we
Yeah.
applied, we put the app in, didn't get anything.
Nothing. So that's when you're going to have to look at, uh, you know, national debt relief and
Each.
compare that to a bankruptcy
Okay.
and decide which one is more suitable for you based on your circumstances. And again, with that type of company, national debt relief type of company, you are going to pay back the debt, not in full. You're going to pay them a fee. So there is going to be a repayment. The bankruptcy, there's going to be a cost of the attorney, which is probably going to be a lot less. So those are the variables. Then you have to look at 10 years on the bankruptcy, 7 years on the defaulting, and that you would get with one of those companies.
Yeah. So with a national debt relief, what they're instructing us to essentially do is to stop paying the debts that we're looking to get rid of in that
Yeah.
sense.
So
So
just so that we don't get in trouble, we're not attacking you,
no,
national debt
that's true.
relief.
That's true.
We're just yeah.
That's true. No, because there
We're
is a
just
world where
yeah,
it can make sense.
yeah, and it does help people, to rebuild over time. Um, but but in a case where, because if the company, whoever it is, can provide you with a solution without defaulting, that's advantageous. However, most of the time you will have to be in a default. You're already on the brink. You're probably going to default anyways.
Yeah.
What happened?
No, you're good. I was just putting you full screen.
Oh, oh, you're probably on the brink. You're gonna default anyways. And so at that point, they're just gonna step in and represent you, and you know take the burden off of you of having to talk to these institutions and deal with it. But again, there's a cost to that. They do have a cost, right? And it's just added on so you don't feel it because you're still paying less than what you would have paid back. So it makes it helps in the end.
Gotcha. Okay.
So before we continue, I think just to be fair to National Debt Relief, because I am looking at their website, and I think I'll just go ahead and share my screen. They are actually offering. It looks like they're offering both options: a what they call debt settlement and then debt consolidation. Hang on, let me just get to the screen here for you guys. Here we go. All right. And so you can see here, first of all, their service costs 25%. That's what they charge of the total debt. So that's what you're going to end up paying for that type of service in this example. But they're differentiating debt settlement and debt consolidation. It says debt settlement reduces your balance, your debt is negotiated down, and you pay less debt than you owe. The creditor forgives the remaining balance in a transaction called a settlement. Debt consolidation combines all of your debt into one loan with a single monthly payment, often at a reduced rate of interest. This typically requires a higher credit score for approval. So exactly kind of what we were talking about before. Um, but to be fair, it looks like they offer both options. So if you don't have the credit to qualify for the loan that they offer, that they give you, then they move into the settlement arena, which could potentially have a negative impact on your credit. And of course, they go on to give you the opportunity to figure out which is the right option for you, how it's going to impact your credit. So yeah, again, just to be fair to them, they do seem to be offering two different levels of service and option, as far as settling the debt and it really having a negative impact um, on your credit versus their consolidation, which would be a loan, which would be a less negative impact, where you're just going to have a reduced interest rate, or on a single loan, one payment on a longer term.
Okay, got it. So just to recap, debt consolidation combines multiple debts into one loan. And in the traditional marketing space, we will see companies like National Debt Relief kind of dominate in that space, where guys like you and me will use the term debt consolidation in our velocity banking strategy, where there's these other tools that are available, such as a personal line of credit, business line of credit, home equity line of credit, first, second position, other than a traditional home equity loan or a big personal loan, jumbo loan that you get in the mail. Instead of doing that where it's fixed, tight, there's no flexibility, you can have more flexibility with lines of credits. And this is where we try to capture as many people as we can before they make that kind of move, where we're just typically thinking lowest payment, lower interest rate, that'll save me more money. It ends up not being the case when you factor in their fees, their origination fees, and the duration of that loan, what you end up paying in total percentage amount of interest. So we're trying to capture a lot of you there before that happens.
Yeah.
Now there's also people watching where, dude, I'm way past that, terrible credit, I'm not going to get approved for anything. Now we're looking at debt settlement, negotiating with creditors. We can try and do that on our own, or we try to hire a firm to reduce the balances that we owe. And you're still gonna pay those debts. Your credit's going to pretty much tank in the process. And then we have debt restructuring, where there's negotiations involved, but with a whole new lender, right? So taking those debts you already have, they're going to get paid off by the new creditor, and that's under debt restructuring. And would we say National Debt Relief pretty much does debt settlement? They call it debt relief. And
Right.
then
So they do those, the top two, debt
the top
consolidation
two,
and
right?
settlement. Right.
They're not
And of
doing
course, their
this.
consolidation is a loan. Correct.
Yeah. So now debt restructuring, right? We went over that. That's negotiating with, new terms with a single creditor. But now the final play, where it's like we're out of all options and we're pretty much deciding between debt settlement, debt restructuring, or a bankruptcy. From your perspective, when you're working with clients
Yeah.
and they're in this position already, they're too far gone for our kind of support on, coaching velocity and even debt snowball, avalanche, cash flow index, all the different detonation strategies that are out there, where it's like, no, they're literally negative cash flow. We're backs against the wall. We're deciding between eating and paying credit cards, and it's easy, right? Eating, groceries, light bill, keeping those on. Everything else is tanking at the moment. At what point, how do you measure whether someone should consider a bankruptcy over debt restructuring, or debt restructuring over bankruptcy? Pros and cons. Where does your mind go with that?
Yeah, I think it's really just going to be a matter of, at that point, ultimately, I would recommend to the client to speak to both parties,
Okay.
speak to an attorney about the bankruptcy, find out what's involved, the time involved, the costs involved, what can be included, you know, what will be taken from them, what will they lose, right? They need to get that picture clear first, and then the same thing with the debt restructure, or debt settlement. Sorry, is find out what's going to be involved there, what's the cost, and then really look at that. And it's going to be a personal choice whether or not you can, because again, you are going to pay back a much larger amount of money, and you're
With
still destroying your credit
Yeah,
with a debt
with the
settlement.
debt restructure.
Yeah,
Okay.
and you're still destroying your credit. Your credit is, it's gone. You got late payments, charge offs, collections showing up, and so that's 7 years. Yes, you can potentially dispute and try to clean and repair that, right?
Sooner.
And I'm an advocate for trying to do that. Now, depending on who you're talking to, Denzel, that's the other side of this equation, because some people are credit repair experts and they can clean up anything. They can clean up all that mess, right? Remove all of it, clean it, give you brand new credit in a month or whatever. And in my experience and what I've seen in this industry when it comes to credit repair, there are rules and laws that these repair companies are supposed to abide by, and there's a lot of people walking on thin ice, between what's legal and what's not legal. And it's just one of those things. If you don't get caught, it's, you're fine. But until you get caught, that, with whatever unscrupulous activity they're doing, filing false police reports claiming there was fraud, there was never fraud, but you're claiming there was, right? Will
Mm.
that can that come back to bite you? It can. Will it? I don't know. There's a lot of people saying, I've heard other people talk about, oh, just we get your inquiries off, we'll wipe it all out, everything will be nice and clean. I work with a guy I refer my clients to, and he's conservative, he's legitimate, he's legal, and I just feel safe referring people to him. I'm not worried about him doing, but he's not going to do that. And so it's not such a slam dunk. Oh, I'm just going to clean my credit and repair it. If you have access to someone like that and you're comfortable working in that arena where it's maybe in the gray area, that's your choice, your decision. But I'm not going to recommend it, right? So whether it's the debt settlement, um, where you're going through default and you're going to end up having 7 years as it's the statute of limitations, um, versus the bankruptcy is going to be a 10-year statute of limitations, right? But with the bankruptcy now, you're going to pay back a lot less. You basically have attorney fees. That's
Right.
it.
You
The cost.
don't pay the back. You don't pay the debt
You
back.
don't. You don't
Right.
pay the debt back. Right. You
So
don't.
you would say
Right.
that's, if we're kind of measuring here one by one, we're saying debt restructuring, credit's going to tank, you're still paying back these people, and once it's all said and done, you're still probably not going to qualify for anything. Your credit's still going to be down,
Right.
and there's a slim chance, if you find the right person, credible, legitimate individual to build your credit back up, still going to take years to go about doing that, and you paid all this money. Okay. Now, the pro is from a religious point of view perspective, a faith perspective, from a standard of ethics perspective, from a better sleep at night, knowing that you paid your debts as a man, as a woman, as an adult, you submitted and paid all your obligations and settled it. You negotiated the terms and you settle it that way. That might be your only measurement for doing that over bankruptcy. Totally understand it from that point of view. Then you're like, okay, my credit's going to tank anyways, and it's going to take me years to pay these people off anyways. If I can go through the cost, because there's still a cost to do debt restructuring as well. So you look at both costs and you see, okay, maybe it's cheaper to actually do a bankruptcy, and I'm willing to have my credit be at jeopardy for a longer period of time before it can be restored. I just had a call today with a client that they went through a bankruptcy in 2015. This year, the bankruptcy fell off. They've been, improving their credit, put themselves in a better position. The 10-year journey without access to credit, essentially. And it's a tough journey, but one that you can absolutely, overcome.
Sure.
So, is there any other thing that we might have missed as it relates to comparing between these two options here, or they're pretty much solid, covered it all?
No, I think we covered it all. I think I think it's just important to get all the information before you make a decision. So do speak to the attorney, get all the facts for your case and your circumstances, your state, and then do get that offer from that debt relief company, um, and then make a decision. Don't just jump on
Mm-hmm.
the first option because it sounds like it might be the best option, and then also go with what your heart says and what your faith says. Do what you feel is the right thing, um, based on your values and beliefs.
Absolutely, because at the end of the day, you're the one that has to sleep with yourself at night. You're the one that's going to have to live with the stress And so if you come from a faith background and you don't pray over this and you don't seek spiritual guidance or go to a pastor or go to a spiritual mentor and only looked at the math, you may find yourself in a whole new world of problems and issues that you're going to have to overcome on top of all this stress. So at the very least, do that. Seek the guidance from a logical perspective. Let's also bring in the faith component, how we're going to feel when this is all said and done. And then the third thing that Sebastian and I would advocate over is, what's the plan once it's all said and done? Are we going to implement financial accountability moving forward? Are we going to bring in a financial coach like a Sebastian, like a Denzel, right? Like others online, that we can be like accountability partners for you in this process once it's all said and done, and then restoring the path to financial freedom and independence. Anything else you want to share before we close out on this?
No, that would be it. Is just that is, set your sights on, the next best action that you can take. Don't, if you're in this predicament, if you are in that at where it's this bad, it's not the end of the world. That's only the last thing I would want to say is, don't let it doesn't mean you failed. Failure is only when you give up and you stop. And it doesn't mean if you file a bankruptcy or you do debt relief that you've given up. That doesn't mean that. I mean, giving up means like, that's it. I'm not going to ever try. I'm not going to fight back. I'm not going to even try to rebound off of that bankruptcy. I'm not going to try to, rebound off of that debt relief. I'm going to just give up, forget it, so you can work your way back up, and this could be a lesson for you to learn from. And it's not the end of the world. Time moves really fast, and you can start rebuilding your credit. You could start being a better steward with your dollars. um, One thing I always say, and I think this would just be a great way to end it, and I'm not sure how you put it to your clients, but you know everything is created for a purpose, right? A pen is designed or created so that we could write, right? Our glasses are designed so we help us see better. Money is created to be spent. And so every dollar is screaming, spend me. And if you don't have a purpose for your dollar, anytime any opportunity presents itself, good, bad, or indifferent, for you to spend that dollar, it's literally screaming, spend me. So moving forward, assign a purpose to every dollar. So at least you have a conversation with yourself before you spend it,
Yep. I
versus
like
it
that.
just getting spent. Because of course, what does everybody say when you ask them, where did your money go?
Don't know.
Don't know. I don't know where it went.
Yeah. It's just you're battling with other things that you haven't been intentional with tracking your dollars, with putting the time toward the things that really do matter, and you're being distracted with other things, and then boom, 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 life happens, and it creates this big moment in time when you find yourself signing the papers for a bankruptcy, signing the contract for a debt restructure, debt settlement, debt consolidation. So we're going to close out here. This was an amazing masterclass on the differences between these types of debt moves that we can make to provide relief in your personal finances. So it's like step one is making that big decision to provide immediate relief in your life. And then the second move, which can be established before you make the big move, is have a financial coach, have an accountability partner to take you through this process, and let's give you the resources necessary. So please reach out to Sebastian, go to his channel, get a hold of him. I have links below that direct you to him and the work that he does, where you can process these things, because this also happens on the business side. And there's a lot of other different plays that can occur on the business side as well. So we covered personal. We'll definitely have to do a side of this on the business, because I know it opens up a little bit more as to other moves that could be done. So thank you for your time, everyone. God bless, and we'll be talking soon.